Hey traders, Akil Stokes here. Welcome back to another episode of the Trading Coach Podcast, available on almost every music streaming and podcasting app. I'm talking iTunes, Apple Music, SoundCloud, Spotify, Google Play, Stitcher, iHeartRadio, etc., etc., etc. In today's episode, I'm going to share with you a conversation that we had in my live trading room dealing with a trader that was looking for essentially perfection in the market. And it's always a tough pill to swallow when we tell a trader that you can't be perfect, right? In general, the markets are imperfect. There's no such thing as perfection, and perfection would be you catch everything at the right moment, right? You catch the beginning of a trend and you get out at the very end. You play the perfect back and forth when the market is consolidating and get out before the next expansion. And it's all great in theory. It's all great in hindsight, right? If you're scrolling back through charts, looking at historical data, you can easily do it. Unfortunately, doing it live is a tougher task and essentially an impossible task. And one of the main differences between professional traders and struggling traders, or successful traders and struggling traders, is the mindset. And a struggling trader is still typically looking for that perfection. How can I do everything right? How can I avoid all losses? How can I maximize all wins? And a successful trader, on the other hand, has basically accepted that it's not going to happen. And it always seems a little weird saying this because it seems pessimistic to be like, yeah, I'm going to be a loser. But you understand your expectancy. You understand what your trading should produce. You understand that, again, the market isn't perfect. And to be successful doesn't mean you have to be a perfectionist in the market. You just have to perfect what you're supposed to do. You have to be perfect at following your trading plan, at executing your rules of engagement. And if you do so, right, yes, you will take losses, but you're going to keep those losses to a minimum and you'll be able to maximize those wins. And when you have that type of combination, that's what brings you consistent success in the market. The problem is just most people can't accept that because losses bring pain. People want less pain. Winners bring pleasure. People want more pleasure, or I should say people want all pleasure, no pain. And that's just not the case. You've got to eat your pain in the market. You've got to be able to deal with the torture that the markets give in order to reap the benefits that they will also give for those who deserve it, right? Patience literally pays in this industry. But check out this recording. Again, it was a live trading room session where we had a fantastic talk about the subject. And of course, if you guys are interested in joining the live trading room, we do have a 14-day trial. You get more than a live trading room. You get access to a training course, daily videos, software, all this other fun stuff. A great community of traders. I was just talking to a trader on Instagram about the power of having a positive community and what effect that has on your trading. So if you're interested in joining a great group of like-minded individuals that are going to push you in the right direction, sign up for that free trial. Just go to tier1trading.com/14-day-trial, or just go to tier1trading.com and click the little button that says 14-day trial. So enjoy this episode, guys, and I'll see you in the next episode of the Trading Coach Podcast. Is an automated harmonic pattern. In an automated harmonic pattern we developed, we found out harmonics lose in the long term in most pairs and most time frames. We're currently scratching our heads in how to develop a winning portfolio that is not over-optimized. Well, I would say this. If you're finding that harmonic patterns lose in the long term on most pairs, I probably shouldn't trade them then, Mike. You should probably trade something that has a positive expectancy. Or if there's some type of dilemma, so if you're saying that, well, I did my back testing and harmonic patterns performed well, but then when I tested my automated version of it, they didn't perform well, then you've got to go back in and find what's the difference between your visual eye test as far as back testing and the software's back testing. Because the software is never going to be the same as your eyes, even with Enigma here. Enigma is the closest we've ever gotten. Right? And it's pretty darn accurate, but it's not the same. I don't agree with everything Enigma shows me. Enigma doesn't see everything that I see. And with any automated system as far as harmonic patterns go, it's never going to be 100%. It can be very close, never be 100%. So if there's a dilemma between the two, and I'm not sure if you're saying that, are you saying there's a dilemma between the two where you tested it and it was profitable, but the system isn't, or just in general, your system hasn't found them profitable? Which one is it? I'm saying that overall equity curve is going down, but between we had some extremely winning periods and we want to capitalize on that. Well, and that's going to be the dilemma with most traders is your system, no matter what it is, whether it's harmonic patterns or something else, is going to go through ebbs and flows. So it's going to go through periods where it performs really, really well. It's going to go through periods where it doesn't perform good at all. And a lot of it depends on the market's condition, right? The patterns perform extremely well in certain market conditions. They don't perform well in other market conditions. I would say this, unfortunately, I don't think there's a way to have the best of both worlds. I don't think there's a way you can take advantage of all of the extreme winning periods, but then avoid the periods of drawdown. Because we can say something like this. So we can say advanced pattern formations form better in periods of consolidation, right? And they perform worse in highly directional periods. The problem is this: we never know that the market is in consolidation until what? Until it's already in consolidation. We don't know that the market is highly directional until what? Until it's already highly directional. So if you're playing the game where you're trying to be, and I get traders all the time that say, okay, well, can I just trade this system when the market's doing this and that system when the market's doing that? We're always going to be late to the party. Because if we don't start trading advanced patterns until the market's in consolidation, right, we may have already missed 2 or 3 setups. And then by the time we start trading it, the market may be all done with its consolidation and now it's directional. And now we're trading as soon as the market's directional. And then we stop trading our advanced pattern formations because the market's directional. And then we skip we skip over to our trend continuation strategy because now that we have confirmation of directional markets, we want to take advantage of that. But now by the time we switch over to our trend continuation strategy, the market's not trending anymore. We're back in consolidation. Now we lost money doing that. And the process repeats and repeats and repeats and repeats and repeats until we go broke. So it ends up being a numbers game where it's similar to like the craps table, where it's you just try to survive, right? My whole trading has helped my gambling career massively. I haven't gambled in like 3 years, right? After that last Vegas trip, what happens in Vegas stays in Vegas, but actually won a lot of money there. But my crap strategy is all about playing the odds. Right? Because poker is a game of skill. Aside from poker, craps has your best odds, right? The casino still has the edge, but you have the better odds in craps than say other games, right? So my whole strategy in craps is to catch the hot streaks. Catch the hot streaks, survive the bad streak. So for you guys that are not familiar with craps, here's a very remedial explanation of it. Basically, there are numbers on the board. You bet money that the dice are going to run on those numbers or land on those numbers. Aside from like your initial roll, or if let's not even worry about the initial roll. When the number 7 is thrown, everyone loses, unless you're betting against the field, right? So my goal is this. Every once in a while, someone gets hot and they will throw the dice and a 7 won't land for like a million throws. My goal is to have every number covered. And you do this in a strategic way, but have every number covered for that hot roll. And then you take full advantage of that hot roll. You take full advantage of that hot roll. You try to make as much money as you can. And then you don't do anything dumb during the cold periods. So you don't get overexcited and overbet. You don't start throwing random numbers on. You stick to your strategy and you survive the drawdown where everyone's crapping out. And you take a little bit of a hit and then you try to survive into that next hot roll. It's kind of like Richard Dennis and the Turtle Traders. You guys familiar with them? Where they were trend continuation traders, right? And their win percentage was like below 20%. But their goal was to try and catch the extended trend. So they would take a small loss here, a small loss. They might take 10, 15 small losses in a row. But once they hopped on that trend, they would take full advantage of it and load up the ship and make all of their money back plus a lot more. And then they go back to losing for 20 trades in a row. So same kind of deal there. Mentally disturbing. I can never do that in the markets. Mentally, I would never be able to lose 20 trades in a row and have the guts to place that 21st trade consistently. Once in a blue moon, yes. I think my biggest streak was 17 losses in a row. But consistently, I'd be defeated. I'd wake up in the morning, I'd look at the mirror and be like, Keel, you are a loser. Because if you tell anyone, hey, I lost 20 trades today, but won one, they're going to be like, dude, you should probably stop. So it's tough. It's tough, especially with stuff like advanced pattern formations. All right, any questions on Dollar Canada before we move to our next pair? First time live room members, this is what you're going to get. You're going to get a little bit of trading. You're going to get a lot of bit of nonsense. But hopefully some of this nonsense ends up being educational.